Hello student, welcome back to Auditor Academy. Today we are going to further our same topic or same chapter, that is your business services. Today we are going to study our new topic, that is your insurance. We have already discussed some of the business services related with this particular chapter. Now we are going to study our new and important point, that is your insurance. You have heard about the different types of insurance rated with the general insurance, life insurance, and motor insurance, and many other type of insurance you have heard about. You usually take general insurance about your shops and services and your business. You take the life insurance for your life, for your medicals, and many other insurance services you take from the different organizations. You take other type of insurance in which you are taking the insurance policy about your vehicles and many other insurance which are available in the markets. So insurance is a very important topic or the important services that you are availing right now, because this type of insurance is very much required for the business point of view, for the life cycle point of view, or for the motor vehicles point of view. So let me help you to understand this kind of insurance. Insurance is a contractual agreement or arrangement through which one party, known as an insurer, agrees to compensate another party, called the insured, for financial losses arising from the specific risk. In return for this protection, the insured pay a predetermined amount known as the premium, right? So in this particular topic, insurer is a person that will compensate another party. So insurance is a what? Who is insurer? Insurer is a particular company. Insurance is a particular organization that will provide compensation, that will provide uh, benefit for the losses, that will compensate a particular person who is called insured for his financial losses. So in this case, insurer, who is the organization, and insured, who is a particular person or a company, will get benefit, and to get the benefit, insured person has to pay a particular amount of premium for the compensation that he or she might receive after having a financial losses. So this amount that he usually pay on a quarterly basis, half yearly basis, or sometimes yearly basis is known as a premium. So premium, you have heard about premium. You usually pay for your general insurance policy, you pay for your life cycle or life insurance policy, for medical policies, or any other motor vehicle policies. So in that case, you are paying a premium amount. You are paying a certain amount of money, which is very much required to regularize your policies, that will help you to avail the service of at the time when you have a financial losses, or when you have to pay for a particular medical services, when you have to pay for your motor vehicles. Sometime when you get a particular part of the vehicle damage, or you caught an accident, at the time you have to need a certain amount of money that will be paid by the insurer, who is a particular organization. So first of all, you have to take the policies while paying the premium. That policies will help you to compensate for your financial losses, and the insurer will pay you that particular amount for your financial losses. So in that case, the policies you have purchased or you are going to purchase for your losses, which need to be covered through the particular amount of premium. If you are paying a premium on a regular basis, then your policy is continuing, and it will definitely help you or cover your financial losses. But if you are not able to pay that amount of premium, then you will not have to be covered, or you will not be covered against the losses that might cause you in the near future. So insurance is very much particular, very much important, and will definitely help you or give you the opportunities to cover your financial losses or the financial damages. So the primary purpose of the insurance is not to prevent risk but to reduce the financial burden caused by the unforeseen event. It provides individual business with the financial security and a confidence to undertake the economic activities. So most of the insurance company that you heard about, like policybazaar.com, sometime you are taking the policies from there. General Life, Life, LIC India, or Max Insurance, or many other companies who are working as an insurer for a particular person, for a particular company, for a particular automobile, then they are providing insurance. And against this particular insurance, you have to pay the particular amount of premium or amount that will secure your particular premise or secure your particular life, that secure your particular medical expenses, that will secure your particular automobile or the vehicle that you are carrying with you. So, insurance is a very much required in a day-to-day activities, in a day-to-day business activities, and this kind of service is particularly provided by the many insurer or the say companies which are taking place in the market. So, what are very much required for this insurance? Insurance is required between the two individuals or the businesses, in which the individual will pay a particular amount of premium and the companies will definitely reimburse you for your financial losses. So, primary purpose of insurance is not to prevent risk but to reduce the financial burden caused by the unforeseen event you might encounter any unforeseen event which you don't think might happen in the near future, but it might happen. Okay, sometimes you have to be sometimes you can meet with an accident, sometimes you can incur the losses of the businesses, sometimes you are incurring the losses in your personal life. So there are many incidents that might happen in the particular life. So insurance will give you the chance to recover from your financial losses. So it definitely provides individual or business with the financial securities and confidence to undertake the economic activities. By having insurance, particular individual or a business can continue its operation for a long period of time. Their business will sustain for a long period of time. They have a confidence to continue their economic activities or undertake the economic activities in which they might think that if they are having any losses that might be covered through a particular insurance policy or insurance companies will help you. Now we are studying about the fundamental principle of insurance. Insurance operate on the principle of pooling of the risk. A large number of people exposed to the similar risk contribute the premium to common fund. Losses suffered by a few policyholders are compensated from this fund, thereby distributing the financial burden among all the participants. So, this insurance, how cover your financial risk, is based on the principle of pooling of the risk. Each one has to face the same kind of risk, and each one has to pay the same amount of premium for a particular risk. So when you have a good amount of money, or when you have a good amount of fund in your hand, or you have collected the fund by having a premium from the particular business or particular individuals, so when loss is suffered or loss incurred, it will not incur to each and every person who is paying the policies or premium. This loss will incur to only few of the person, few of the policy holder, few of the individual, few of the business firm, and insurance company or insurance will pay to them only. So loss suffered by a few policy holders are compensated by this fund, thereby distributing the financial burden among all the participants. So you are just paying the small amount of premium, but this premium will create a huge amount of fund in the eyes of insurer. Insurer is a particular company who will provide you insurance. So when you incur a particular loss, when you incur a particular damages, in terms of your vehicle, in terms of your life, in terms of your medical facilities, in terms of any other incident, then the company will pay you out of this fund that they have created by paying your by receiving your premium. So this is the fundamental amount of working, or this is the fundamental base of working of the insurance company or insurance business. So function of the insurance are: insurance performs several important functions in both personal and your business life, and how they are benefiting to individuals and the business, which might help you understand in this particular point. First, it will help you provide the certainty. Insurance officer offer financial assurance against the uncertain if future event. Although the occurrence of a loss cannot be predicted, the financial consequences become more manageable because the compensation is available under the policies, right? So insurance give you the certainty that if you incur any loss, then the insurer or the insurance company will protect you from your losses. Okay, so this might be a good sign for the individual or the business who want to continue their life or continue their business. Next is provide the protection. Insurance safeguard the individual or business from financial losses resulting from accident, fire, theft, natural calamities, and other covered risks. Right? This is a very important or easy to understand. Next is it will help you sharing of risk. Instead of one person bearing the entire financial losses, insurance distribute the burden among all the policyholders through the collection of premium. Right? Suppose a person incurred a loss of 20 lakh in their business, in his business, and if an individual incurred a loss of 20 lakh in terms of medical facilities, so along with that person, all other individuals are also paying their premium amount. But this kind of incident in which he or she is suffering from a particular medical emergencies or suffering from any business losses, so insurance company will definitely pay to that individual. But this kind of losses, this kind of burden will be scattered, will be distributed among the all the policyholder who are paying a particular amount of premium. So only paying a certain amount of premium, you can cover your major financial losses, which will be distributed among other policyholders who have purchased a particular policy from the particular insurance company. So you have shared the risk of doing a business, you have shared the risk of your own life, you have shared the risk of your general insurance related with your mobile phone. Sometimes you have a insurance of your mobile phone as well, then you can have a protection from the risk. Next, it will assist in a capital formation. Insurance company collects huge amount of premium from the policyholder. These funds are invested in a predictive sector of the economy. It may be a agriculture economy, it may be in a manufacturing, it may be in a service industry. So you have a number of options or a number of sectors in which the this particular insurance company, it might be LIC or some other company, which will invest in a particular sector of the economy. This will help them to develop the economy, and there's operational activities or economic activities that might be beneficial for the other sector of the economy. So definitely insurance will help in economic development, in economic development and developing the employment opportunities as well, and it will also help in the capital formations, whether in terms of metro station, its dams, bridges, railway tracks, and many other capitals that the economy can develop through this kind of contribution, through this kind of capital or its fund. So these are the assistance, these are the benefit that the insurance will work for you, or you can sometimes say that the function of insurance will help in these particular five major aspects of the insurance. Now we are working on the principle of insurance. What are the principal insurance? Principal insurance are very much important, and each one of you has to learn and understand this particular point. Insurance contracts are governed by the certain well-established principle that ensure fairness, transparency, and a proper settlement of the claims. So first principle is the principle of utmost good faith. Both the insurance and insured are required to disclose every material fact honestly before entering into insurance contract. A material fact is any information that may influence the insurer's decisions regarding acceptance of the risk and the determination of the premium. Failure to disclose such information may make the contract void. So this principle will let you know refers to the particular point in which insurance insurer and the insured. Insurer is the who will do the insurance, and insured who will get the insured insurance. So insurer and insured must share each and every element of the fact which are very much required to enter into a particular contract. So insured will have to share each and every element of their business, each and element of their life, whether they are purchasing the medical facility, medical policies, health policies, or sometimes they are purchasing the business policies. So insured may be a person, insured may be an organization. So insured should share every material fact which is very much required from the insurer point of view before entering into any contract. They should not hide anything important. They should share with each other, which is a very material fact from the insurer point of view, and on the behalf of that insurer will protect the insured or the interest of the insured, and this material fact will definitely help the insured in the near future. So a material fact is any information that may influence the insurer's decisions regarding the acceptance of the risk and determination of the premium. Because once the material fact is shared with the insurer will definitely find the appropriate policies for you and will give you the information about the right amount of premium that you may pay along with your policies that you are going to purchase. So failure to disclose such information may make the contract void. If there is anything important that the insured has not shared with the particular insurer, so insurers will consider that particular point, and on the behalf of that particular point this insurance policies will consider as a void, and it will not be workable, it will not be executed. So this is the very fundamental principle of utmost good faith, in which insured will have a good faith in the insurer, and an insurer on the behalf of that good faith or the material fact will give information about the particular policy and its premium to the insured person, right? So if A and B is there is a two-person, A will share the material fact to the B will consider that material factor and will let the know a particular policy and the insurance premium to A. On the behalf of that particular premium or the particular policies, A will start paying premium to B. So this is our all information about the principle of utmost good faith. So, for example, a person applying for health insurance or must truly disclose existing illness, previous surgeries, and chronic medical conditions. This is the fundamental of this particular principle. Next, principle of insurable interest. The person purchasing insurance must have a financial or legal interest in the subject matter being insured. This means that the insured should suffer a financial loss if the insured property or the person is damaged or lost. So, according to this principle, in particular insured will have an insurable interest in a particular property. So, the person who is going to purchase a particular insurance must have a financial legal interest in the subject matter of being insured. That person should have that this property belongs to him, and he will definitely good care of that particular property. This means that insured should suffer a financial losses if the insured property or the person is damaged or lost. So in that case, if having a legal interest in a particular product or in a particular business or in particular life, if insured also even though insured might suffer a financial losses, then particular property or particular person might also have a damage or loss. So in that case, you are having a insurable interest in you because you have purchased your policies for yourself, you have purchased for policies for your business, then definitely you have to be very careful about your interest. Your in on the behalf of your interest, the you will purchase a premium, you will purchase a policy, you will pay a premium, then this principle will definitely work on that particular point. Let me help you through the example. A homeowner has an insurable interest in the house, right? So a homeowner will definitely get insurance for his house because he has an insurable interest in a particular house. Second, a business has an insurable interest in its machinery. A business without a machinery cannot survive. So businessman or a business should get a particular insurance about its machinery because business has an insurable interest in its machinery. An employer may have an insurable interest in a key employee where permitted by the law. Employers can get a major life insurance policies about uh, uh, for whole of their employees who are working for him. So employer may have an insurable interest in his employees who is helping in his business, who is helping in their particular services, who is helping in their particular operations. So employer should have an insurable interest in a particular employee or say machinery or in the house. So any person who wants to take an insurance or pay a insurance amount, then he should have an insurable interest in the house. He should very careful about the house. He should be very careful about machinery. So he cannot avoid that I have a no insurance interest in a particular product to whom I'm going to purchase a particular premium or the policy. So you should have a particular interest in the particular property. That's why this principle will work for the particular point. Next is principle of indemnity. Principle of indemnity means it if you have taken the insurance, then insurance company will definitely indemnify. Indemnify it means it will the insurance company will compensate for your loss. So indemnity means compensation that you will receive through the insurance company. So objective of the indemnity is to restore the insured to the same financial position that existed before the loss incurred. So a compensation is limited to the actual amount of loss suffered. Insurance should not become a source of profit. So indemnity principle will help you to understand that if a certain person has got some financial has incurred some financial losses, then insurance company will cover him that financial losses up to the point where he or she has been suffered, up to the point where he or she has been suffered or where he or she has got financial losses. So this particular principle will help the business or the individual up to the point where they should be survived, up to the point where they should be compensated. In this particular point, insurance company will try to bring the particular business or particular person to the prior existing conditions before the loss incurred. This will particular principle will help you understand insurance will company will pay you the amount in which, yeah, through which you will be able to continue or exist for a long period of time after, even though you have incurred a particular loss. So your loss will be compensated, your loss will be complete, restored by the particular insurance company. So this principle will definitely help you to indemnify, to compensate for your loss. So compensation is limited to the loss, actual amount of loss, and the insurance should not become a source of profit. You cannot earn the profit from this particular insurance policies. You cannot destroy your own particular business. You cannot destroy yourself. You cannot destroy a particular vehicle to get a particular profit from the insurance company. So insurance is just a compensation or indemnifications that will provide it to a person who has suffered a loss in terms of the business, in terms of the life, or in terms of the particular vehicle, right? So this principle will work for that particular point. Next, but before this continuation, we understood this principle will apply to fire insurance or the marine insurance. Fire insurance related with the fire, and marine insurance with the related with the sea perils or the losses due to the sea or its water. So this particular principle will apply in the case of fire insurance and the marine insurance. It does not apply to life insurance because the human life cannot be measured in a monetary terms. Next principle is the principle of contribution. When the same property is insured with more than one insurer, each insurer contributes towards the loss in a proportion to its liabilities. So this principle will help you to understand. Suppose you have a one property, and this particular property has been insured by a particular insurance by two or three insurance company. So each insurance company will give you a certain point or certain amount of money that will reflect or that will be proportionate to your insured amount. Suppose you have taken a insurance of 1 lakh from three different companies. So each company will pay you 33,000, 33,000, 33,000 in terms of contribution you have made or you have paid your premium to. So in that case, when you have a principle of contribution, you will not receive 1 lakh, 1 lakh, and 1 lakh from different companies. You will only receive a proportion of your 1 lakh from all three particular companies. So you will receive one third, one third, one third of 1 lakh from each one of the insurers to whom you have taken the insurance policies. So this principle prevent the insured from recurring more than actual loss. In any case, you will not be having a more amount than the insured amount. Insured amount is suppose you were 1 lakh, so you will only have amount to recover from the insurance company that is up to 1 lakh. It will be given to you in a proportion by the different companies to whom you have taken the particular insurance or particular amount of money. So this principle is very important again. Next is the principle of subrogations. After settling a claim, the insurer acquires the legal right to recover the amount from the person responsible for causing the losses. So this cause or this ensures that the insured does not receive compensation twice for the same loss. So this principle of subrogation will help you once the insurance company or once the insurer have given a claim to the particular person, and now he came to know that that particular person is responsible for this particular loss. So insurer will recover the amount that insurance company has given to the insurer from the particular responsible person. Suppose, for example, after having a loss of 1 lakh, an individual receive a 1 lakh from the insurance company, but the loss incurred to that person is due to the third party or due to the third person. So now the insurance company came to know that he or she is responsible for this cause. So the insurer will re- receive the particular amount from that person who is responsible for causing that loss. So this particular principle will help you to understand that after paying a certain amount of money to the insured person, insurer will get a particular amount from the person to by whom that person has been that has been caused loss due to the certain reasons. So third party will be responsible, and insurance company will collect the amount from the third party, and insured whatever amount he insured company has been paid to the insurer. So this is the principle of subrogations. Next is the principle of cause proxima. When a loss occurs due to the multiple causes, the insurer determines the nearest and the most effective cause of the losses. So compensation is payable only if that cause is covered under the insurance policies. Sometimes you understand that there are many causes of losses to a particular person, and the insurer has to devise which particular or which nearest cause will has caused a problem or a caused loss to the particular insured. So compensation will be payable as per the nearest and the most effective cause, and it should be covered under the policies at the time when it was purchased, right? So at the time when it was purchased, and the insurance company has mentioned that particular cause, then insurance company is liable to pay the amount. Otherwise, they will not pay any amount to the insured person, right? So this is a principle of cause proxima. Next, there are three types of insurance. First is your life, second is your fire, and third one is your marine. Life insurance is related with your life cycle, and life insurance is a contract under which the insurer agrees to pay a specified sum of money to the nominee and legal representative upon the death of the insured or the insured on the maturity of the policies, depending upon the terms of contract. Unlike other forms of insurance, life insurance is not based on the principle of indemnity because the value of a human life cannot be measured precisely. So this is the life insurance in which a certain sum of money is provided to the nominee or a legal representative once the insured died due to the particular reason. Or in case of maturity of particular policy, that amount is given to particular insured person or on the behalf of his nominee or the legal representative. But this particular life insurance is not covered is and is not based on the principle of indemnity because life human life cannot be predictable. Human life cannot be having a value like any other property, and it is human life is very valuable, and it is having a more value than the money. So life insurance is not based on principle of indemnity because the value of human life cannot be measured precisely. So features that will cover under the insurance, life insurance is it covers the risk associated with the human life. It offers the financial protection to the dependent. It combines the protection with a long-term saving in many plans, and premium may be paid monthly, quarterly, half-yearly, and annually. And the sum assured becomes payable on death and a policy maturity as applicable. So this particular life insurance policies will have a certain features in terms of these particular point. After this, you will understand what is the importance of the life insurance policy and how it is helpful to an individual. First, life insurance help to provide financial security to the family members, and it definitely meet the future financial obligation that is required. It encourages a systematic saving, and finally, it supports a long-term financial planning. So once you get the life insurance from or a life insurance policy from the insurer, definitely it will give protection to the family member of the insured person. It will definitely help in fulfilling the obligation associated with the future financial problems that might exist or that might occur at any moment of time, or that will and third one, that will increase the systematic saving. Definitely you can have a you can save the amount of money through the particular life insurance if particular life is continue after the maturity of a particular policy, then this amount will be given to the insured or its dependent. Next, it definitely support the long-term financial planning. Definitely, it will help you to fulfill the long-term financial goals or the any other goal which is associated with this particular life insurance and its policies. So this is very fundamental about the life insurance. Next, we need to understand your fire insurance. Fire insurance provide protection against the financial losses resulting from fire and certain allied risks mentioned in the insurance policies. The insurer compensates the insured for the actual loss suffered due to the damage or the destruction of the insured property. Fire insurance is basically related with the fire, and if particular item or particular property against which you have taken your fire insurance is damaged, then definitely insurer will compensate for the loss or the suffer due to the damage or destruction of the insured policies or the property. So fire insurance will definitely compensate for your property, compensate for your damages in terms of goods, in terms of instruments, or in terms of any other part which is secured by the fire through the insurance. Next is your features of this financial fire insurance. First, it covers the movable as well as the immovable properties. It operates on the principle of indemnities. Compensation is restricted to the actual loss. So the fire insurance will be work on the principle of indemnity. So this is the fundamental, and you need to require to learn or understand from the MCQ's point of view. Third one is restricted to the actual loss. More than the loss, you will not have any amount of, and more than the loss, you have not any provision to get more money, uh, more than your actual loss. So you are restricted to that amount, and this amount is very much particular for your actual loss. So in any case, insurance company will not pay you more than your actual loss. So policies, and this is fundamental, and the policies are generally insured for the fixed period and may be renewed after every 5 year or every 10 year. You have to get your insurance policy renewed through the particular insurance companies. So this is the important features of the fire insurance. And what are the essential element of fire insurance contract? First, it's a presence of insurable interest. Your insurable interest in your property, like the owner have insurable interest in his house. Each material fact should be shared to the insurer by the insured person. There should be a existence of the insured property. It should not be such as that the properties are not existing and you are taking the policies for that particular property. So existence of that particular insurance insured policies must be there. It may be your house, it may be your business premises, it may be of any movable or immovable assets, right? Then fourth one is loss caused by the insured risk. Loss caused by the insured risk, right? Suppose at the time of taking the insurance, if material fact is shared through the insurer to the insurance company, then insurance company will cover that particular risk into their document. And if property is damaged or lost due to that particular material fact, then the company is liable to pay the money to the insured person, right? So this is very fundamental in terms of insured risk. Compliances with the policies condition. You have to abide by the laws and the policies condition in which the insurance company will pay you. Otherwise, they will not pay you any amount for the loss or damage caused to you. Next is your marine insurance. Marine insurance related with the sea and its problems. Marine insurance protects the against losses arising due to the transportation of goods and the vessels through the sea routes and other modes covered by the policies. It safeguards the ships and cargo and the freight against the risk associated with the transit. Because you have understood that most of the time when you export or import the good from the overseas country, then overseas country send the goods in a container and through the ships, through the particular cargo and the freight, then there is a huge chances it might be damaged through a particular sea water, during the sea perils, sea problems, or during the transit. There might be some causes. There might some problem due to the rats or any other element that might cause damage to a particular item that is damaging to a particular product. So marine insurance is very much required when you export or import goods through the particular ship's cargo or freight, and risk associated during this transit is covered in the marine insurance. So the features will help you to understand. First is your it covers the risk occurring during the transportation. Second is based on the principle of indemnity, again like a marine insurance, again like a fire insurance. This principle is also have the base of principle of indemnities. It is applicable on both domestic or international trade. It protects the ships, goods, or freight charges. Right. So once you have taken the insurance of marine or the goods transit for goods transit from one location to another or one country to another. So once you have taken the particular insurance policies for marine goods, then it will definitely protect the ships, it will definitely protect the goods, and it will definitely protect the further freight charges that you don't need to pay once you have taken this particular policies. So these policies and you can say this marine policies will help you in shipping the goods from through the ship's cargo and freight, right? So this will definitely protect you against the damage through the sea routes or any other modes covered under the particular policies. Next, there are different types of marine insurance. Is first is a full insurance, then your cargo insurance, and the third one is your freight insurance. So full insurance that will protect the ships and the vessel against the losses caused by the marine risk, protect the ship and vessel against the losses caused by the marine risk. This insurance will cover the ships as well as the particular product along with the ships. Cargo insurance it provides protection for goods ships or being transported from one destination to another. That will cover the cargo. And the freight insurance will protect the freight charges expected to be earned by the ship owner, right? So this type of insurance hull in which you will cover the ship, cargo in which you will cover the goods, and freight insurance in which you cover the charges. So this particular insurance policies will cover you when you are sending or when you are shipping through the ship, when you are sending the goods or when you are paying the particular charges for your freight or in terms of goods. So this insurance will protect you in all three cases. After studying insurance, you are moving the communication services. Communication services enables business to maintain continuous contact with the supplier, customer, competitors, and other stakeholders. Since no business operates independently, the exchange of information and ideas is essential for efficient decision making and coordination. In today's highly competitive environment, the communication system must be fast, reliable, and accurate. Modern electronic technologies has transformed business communications, making it quicker and more efficient. So communication is a very much fundamental and a very much required for a day-to-day business. And this particular communication is also available in service and its related business. So major communication services available to businesses are postal services and telecom services. First, we need to understand postal services. Indian postal departments provides a wide range of postal facilities across the countries. For efficient administration, India is divided into 22 postal circles, each responsible for managing the head post office, sub post offices, and branch post offices within its jurisdiction. The service provided by the postal department are broadly classified into the following category. It will include postal service in terms of financial facilities, and that financial facilities include the Post office provided several savings and investment schemes along with the basic banking facilities. So during the postal service or during the post office, you can channelize your money, you can save your money, you can invest in money, your different schemes. And these schemes might be as a public provident fund, Kisan Vikas Patra, National Savings Certificate, monthly income scheme, recurring deposit account that you consider as a RD account, saving account, time deposit, FD that you consider in terms of time deposit account, and money order facilities. So these are the financial facilities that are provided through particular postal services. Next, you are working on the mail facilities. You are sending the document through the particular mail facilities. The mail services ensure the safe and efficient transmission of an article from one place to another. These articles may include parcel services, registration cost facilities, or insurance facilities. So, parcel services will use for sending the goods or article from one location to another. Second, registration facilities will include additional security and a proof for important postal articles. You will definitely uh, sending a particular article or particular postals from that particular post office, then you are getting it registered from the particular post office account or post office facilities. They will give you a particular slip in which you will definitely have a this particular service, this particular poster article has been registered under it, and once it will be delivered to a particular location, and the particular person who has received that amount or received that particular article will sign it, and it will recover or return to your mailing, return to the person to whom through which it has been sent. So this is your registration facilities. So this particular facilities will definitely help in sending the particular document securely, with securities or with the proof to a particular person, and the registered document will come to you back. Registered document will come back to the person who has sent through the particular post office. So this is the registration facilities. Third one is the insurance facilities. It offers the insurance protection against the risk that may arise due to the post transmission. If any document misplaced, damages, or sometime it lost in the during the transmission, then post office or the public, particularly head office or sub post office, will compensate up to a certain amount of money or up to the particular up to the particular value of that particular goods or the particular items, right? So the if your value, if the parcel has a particular value of say 1 lakh or 2 lakh, so insurance particular post office will pay you 50,000 or 60,000 or 70,000 as per the value decided through the particular head post office or the sub head office or through the branch offices. So they cannot give you the exact equal amount of the particular article or the particular goods. They will do this in a same proportion in which the you have purchased your insurance policies. So they will also give you insurance, or they will also give you the amount as per according to or equal to the actual losses suffered to you. So that will be your insurance facilities. Next is your allied postal services. What are the extra postal service that you can receive? It will include the greeting post, media post, direct post, or international money transfer, or passport facilities, speed post, and e-bill post. So these are the different postal services that are provided through the particular head office or sub post office or sub branch post office to different part of India. So these are the extra postal service facilities or extra postal services that you receive. Next, you are working on your telecom services. A strong Telecommunication network is essential for the economic and the social progress of a country. It serves as a backbone of the modern business by enabling the quick communications and the information exchange across the different regions. So this particular telecommunication service will help you to understand how the economic and the social progress is done in a particular country, and the backbone of this particular progress is your communications, right? So without an efficient telecom infrastructure, conducting business across cities, countries, and continent would not be possible. It would be definitely extremely difficult. Rapid development in telecommunication, information technologies, consumer electronics, and media have significantly improved business communication, right? And recognize its importance. Government of India introduced the new telecom policies in 1999 and broadband policies in 2004 to expand the telecom services. It will improve connectivity and support the country's vision of the becoming a global information technology leaders. These policies aims to extend the communication facilities to understand area where providing advanced and services, advanced services required for economic development. And there are, you can understand different types of telecommunication services that you can study through this particular point. First is your cellular mobile services. These services include mobile voice communication, text messaging, and data services, and public call offices. They operate through the different mobile network technologies and provide connectivity with other telecom network. Second is your fixed line services. Fixed line services provide the voice data and other communication facility primarily through the fiber optical cable network. They establish long distance communication link and connect seamlessly with other telecom system. So we are talking about the fixed line or fixed file telecom services. Cable services mainly provide entertainment related media services within a license area. With technological advancements, cable networks are increasingly capable of supporting the two-way communications, including voice, data, information services similar to fixed line system. Fourth one is VSAT services. VSAT services is a very small aperture terminal. Is a basically a satellite-based communication system that provide dependable connectivity in both urban and remote regions. It support applications such as a telemedicine, online newspaper, tele-education, and dissemination of market information, especially where conventional communication infrastructure is limited. So VSAT services is very prominent and required in the rural area as of now, and it is considered for sharing the information about telemedicines, online newspapers, or tele-education and dissemination of market information. Next, DTS services, direct to home. DTS services in terms of your cable services that you usually have as of now. DTH or direct to home is a satellite based broadcasting services that allow television channel that you use to see right now at your home to be received directly through a dish antenna or set-top box without depending upon the local cable operator. Service providers offer multiple television channels through this particular platform. Tata Play, uh, which very much consider or sometime Dish, Airtel Dish TV. These kind of D2H services are available right now in all over in across the India. So DTH services are very much required or fundamentals for the for the telecommunication services. So these are the five major telecommunication services which are essentially available in our countries. Next, we are focusing on other important point that is your warehousing. And warehousing is the last important point of this particular chapter. Warehousing refers to the scientific and a systematic storage of goods so that their quality, utilities, and value are preserved until they are required Earlier, warehouses were viewed simply as a storage facilities. Today, they have evolved into modern logistics centers that perform several additional functions, enabling goods to reach customers at the right time and in the desired condition or at an economical cost. So warehousing is a definitely a service that is provided to the manufacturer or the producer of the goods who produce the goods in a bulk quantity. They store their goods and allow the goods to be reached at a particular place or a particular distributor as and when required, so that they can further reach to the retail shop, and at the end they can reach the customer and its doorstep. So warehousing will definitely help the producer or the manufacturer of the goods and services, which enable them to share or to supply the goods without any hindrance, without any problems, to a large amount of distribution channel, or to a large amount of people, and they can avail the goods and services without having much problems in terms of its supply and its demand. So modern warehousing are on automated handling the various system. Modern warehousing are automated handling system, computer control equipment, and a warehouse management software to improve the efficiency and inventory control. Let me help you to understand there are different types of warehouses, which we consider them as a private houses. Private houses are owned, operated, and leased by the manufacturer, wholesaler, or a large retail organization for storing their own goods. Features might include it used exclusively by the owner, it offers the better control over inventory, it provides flexibility in a storage operation, it improves the coordination with the dealer and the distribution channel. It is planned around the efficient material handling system to ensure smooth movement of the goods. Second, it's a public warehouse in which government will provide facilities to manufacturer, trader, or the general public upon payment of the prescribed charges. They will provide you the warehouses facilities. So public warehouse provide storage facility to manufacturer, traders, and a general public upon payment of the prescribed charges. Features might include it operate under the government license, warehouses owner act as a custodian of the stored goods. Additional facilities such as a road, rail transportation may also be provided, suitable for a small business and cannot afford private warehouses. It is also good for a small business who cannot afford the private warehouses where they have to pay the huge amount of charges for storing the goods at particular warehouse. It definitely offers the flexibility. After this, it definitely offers the flexibility, lower the fixed cost, and the value-added services like packaging and labeling. So public warehouses are cheaply available to the person, manufacturer, or the traders who cannot afford private houses or its huge charges. Next, we are focusing on bonded warehouses. Bonded warehouses are authorized by the government to store imported goods before custom duty is paid. Right? In particular, bonded warehouse, goods are stored who are imported from the other countries, and first of all you have to pay the custom duty on it, on these particular goods, and then you can get it released by the particular warehouse. So bonded warehouse are authorized by the government to store imported goods before custom duty is paid. Their features might be important. Imported goods remain under the custom supervision until duty is cleared. As I told you, importers can defer payment of custom duties. Goods may be withdrawn in installment as required. Buyers may inspect packages, blend grades, and brand goods before removal where the permitted. And last one is goods intended for a re-export may not require payment of a custom duty, thereby increasing the re-export rate. So through this particular bonded warehouse, these bonded warehouse definitely is good for re-exporting purpose, in which suppose you are importing goods from the China, India is importing goods from the China, and India is sending goods further to Nepal. So in that case you do not have to pay any custom duty. That goods is directly transported or re-exported from India to Nepal. And fourth point that I said, buyers may inspect package and blend and grade and branded goods before removal where permitted. So buyers, who is the actual purchaser of the goods, may inspect, package, or blend and grade and brand the goods before removal when permitted. So in that case, when the custom authority allow them, so buyers can do these kind of activities before the goods is actually transmitted, actually removed from the particular warehouse. So these bonded warehouse will give you the opportunities to secure your goods, and you can get it your goods released once you pay your custom duty. So these bonded house are very much required from the government point of view, because the government has to import and export the different goods and service at a different period of time, or in various ways they are importing and re-exporting the goods from one country to another. So these bonded warehouse will work for the government. Next, government warehouse. These warehouses are fully owned and managed by the government organization for storing the different categories of the goods. For example, Food Corporation of India, you have heard this name before, State Trading Company, and the Center Warehousing Corporations. So these are the fundamental government warehouses that you need to understand, that you need to remember, because sometimes they might be asked in your MCQs and your different questions. Fifth one is cooperative warehouses. Cooperative warehouses basically are marketing and agriculture cooperative societies that establish these warehouses primarily for the benefit of their member. They provide economical storage facilities, particularly to farmers and the cooperative institutions. So this is very important and very basics about the cooperative warehouses. Now let me help you to understand what are the function of warehousing. Warehousing functions are divided into six particular points. First is the consolidation. Warehouses collect goods from the different manufacturing units and combine them into a single consignment before dispatching them to the customer. So this reduce transportation costs and improve the distribution efficiencies, in which manufacturing a different manufacturing unit and their goods are put into a single consignment, and then they are sent to a particular customer. They do not have to book the separate consignment for a same customer or a same place. So consolidation, in which you bring all the different goods that should be sent to a particular customer or a single customer, then are combined together. They are combined into a particular container or a consignment and then shipped to a particular person. So this is the consolidation. Break the bulk. Large consignment received from the production unit are divided into smaller quantity according to the customer requirement. These small lots are then transported to the respective destination. In this particular warehousing, large consignment or a large container of the goods are segregated or are divided into smaller quantity or a smaller container, and different container belongs to a different destination, and then they are transported to different areas to whom they belongs to. So this is your break the bulk warehousing will work, or break the bulk function will work for the warehouse. Next is your stockpiling. Warehouses store seasonal product and raw material until they are needed for a production or the sale. For example, you buy your potato, your onion from the market. So these are the seasonal products, or sometimes raw material like grain and any other items which you use consume in your day-to-day food or consumption. Agriculture commodities harvested during a particular season can also be preserved and released gradually to meet the demand throughout the years. So agriculture and related crops which are based on the season, they are stored in the particular warehouse. So this is how you are filing your stock about a particular agriculture or its particular crops. And at the time of demand, you are releasing that stock into the market. Next is your value-added services. Warehouses perform several additional activities such as in-transit mixing, packaging, repackaging, and your labeling. They may also undertake grading according to the qualities and quantities and divide goods into smaller lots to suit the customer requirements. Right. So value-added services in the warehouses facilities where they have to remix the particular goods or services, then they have to package them, repackage them, then they have to label them. So these kind of additional activities are done through the particular warehouse. So they may also undertake and grading according to the quantity, how much qualities they have to add on, or how much they have to pack, and then you have to divide the goods according to the smaller lots to suit the customer requirement, because every customer would not demand in a high quantity or in very good qualities. They have their own quantity, they have their own demand, so definitely packaging is done according to the particular ways. So this is how your value added service will work for the particular warehouse. Next is your price stabilization. Warehouses help maintain price stability by balancing the supply with market demand. Supplier surplus goods are stored during the period of excess supply and release when demand increases and reducing sharp price fluctuation. So these price stabilizations will help you to understand this warehousing function. Warehouse will definitely help you to maintain the supply of the goods and the services into the market. When the supply of a particular goods is sent into the market as and when required, then the price will not uh, go high on according to the demand or fluctuate. So price stability would be there as per the balancing of the supply and the demand. So this warehousing function will definitely stabilize the price in the market and avoid the excess supply and excess demand when it is basically required. Next is your financing. Financing is related with the warehouse and the where the owner may provide loan against the security of goods stored in the warehouse. They may also supply the goods to the customers on credit, thereby supporting the business finances. So financing function of the warehouse will allow the warehouse owner, which will provide loan against the security of goods stored in the warehouses. Sometimes they have stored the goods in the warehouse, and against it they have provided loan to the particular person. So they may also supply goods to the customer on credit, thereby supporting the business finances. So business finance will definitely help for this kind of activity and this kind of business as well. So this is the end of this particular chapter, and financing option will definitely help you to understand the function of the warehousing. So we have reached end of this particular chapter, and now we are concluding. Hope you find this particular content useful, and you can share, like, and subscribe this channel for further video. And this particular video will help you to understand the business services in a particular area which you usually entertain with, and this is all about your business services. So thank you very much for listening this particular video, and we will meet you in the next video. Thank you very much. Till then, take care and have a nice day.